Hello traders, it's Wednesday, September 6th. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video. First of all, let's review the major market movements. So the first instruments we're referring to the dollar index in 4-hourly charts. So the US dollar was on course for its biggest daily percentage decline against the safe haven yen in more than 3 months on Tuesday, with the dollar index, which measures the greenback against a basket of 6 major rivals, fell as much as 0.5% to a session low of 92.183 on concerns about North Korea, largest nuclear test, and a Federal Reserve officials' comments about low US inflation. So the dollar fell as much as 1% against the Japanese currencies to 108.65, its lowest level since August 29 after North Korea conducted the 6th and biggest nuclear test 2 days ago. So the dollar was last set for its biggest daily drop against the yen since middle of May. A top North Korean diplomat warned that his country was ready to send more gift packages to the United States as world powers struggle for a response to Pyongyang's latest nuclear weapon test. So the dollar fell as much as 0.4% as well against the Swiss francs and other safe haven currencies on the risk surrounding North Korea to a session low of 0.9545 franc. So Federal Reserve Governor Leo Brainerd said inflation was well short of targets, so the Federal Reserve should be cautious about raising US interest rates, and according to analysts said the comments cast more doubt over the likelihood of another rate hike this year, and Brainerd, a permanent voting member on the Federal Reserve Monetary Policy Committee, has in the past convinced colleagues to delay tightenings. So the Federal Reserve has raised the interest rate twice this year. Investors have since grown skeptical and now give a December rate hike a 27% probability, down from 30% before Brainerd spoke. While the euro was gained as much as 0.4% to 1.1939 ahead of a European Central Bank policy meeting, and that was still below a more than 2.5-year high of 1.2069, which touched last week. So the euro gained even as analysts expect ECB policymakers might voice some concerns at the meeting about the euro's rank. Having a tad in commodities markets, the gold price was surged on Tuesdays, rose $13.04 or about 0.98% to traded around $1,343.42 a troy ounce, following a slump in the dollars on the back of rising geopolitical uncertainty and falling expectations that the Federal Reserve will hike rates for a third time later this year. So the gold price has jumped to near 1-year high as geopolitical uncertainty remained front and center, fueling the safe haven demand in the wake of North Korea's largest and most powerful nuclear test over the weekend. So also adding to the rally in gold prices were comments from Federal Reserve Governor Leo Brainerd urging the US Central Bank to delay raising interest rates until the trend of slowing inflation improves. So gold price is sensitive to move lower in both bond yields and US dollars. A lower dollar makes gold cheaper for holders of foreign currencies while falling the United States rates. So reduce the opportunity cost of the holding non-yielding assets such as billions. So according to a report from the Commodities Future Trading Commissions, the CFTC on Friday, the gold's rallies to a 1-year peak comes amid a surge in buying activity among money managers after bullish bets on gold rose to 231,000, which is the highest level in 11 months. As for the oil price, the crude price rose about 3% on Tuesday as the gradual restart of refineries in the US Gulf that were shunned by Hurricane Harvey raised demand for crude. So Texas was edging towards recovery from the devastations of Harvey that hit its coast late on August 25 as shipping channels, oil pipelines, and refineries restarted some operations. At its peak, the hurricane knocked out almost a quarter of all US refining capacities. So on Tuesdays, sources said Modiva Enterprise could begin restarting the 603,000 barrel per day port after refinery and the nation's largest this week. So crude oil infrastructure was also still recovering from the storms, and Mexico Pemex said on Tuesday that the storm forced the cancellations of several crude oil export shipments. So signals that organizations of the petroleum exporting countries could extend its output limits beyond the first quarter of 2018 also boosted the prices, as did a weak US dollars. But another hurricane, Irma, strengthened on Tuesday into a Category 5 hurricane, the most powerful storm on this Saffir-Simpson scale with sustained winds of over 157 miles per hour. So the US National Hurricane Center forecasts a path for the storm has Irma passing south of Florida on Sunday on its way into the Gulf of Mexico. And again, Capitol Dove said worries that Irma could veer into the US oil and gas platforms in the Gulf also underpin the prices. Tough, the NHC said it is too early to determine the direct impact Irma might have. So the September is typically the peak of the hurricane seasons. Another storm is developing behind Irma in the Atlantic, and an area of bad weather in the southwest Gulf of Mexico threatens to become a tropical storm in the next 2 days. So now we're gonna review the highlighted economic data that's on yesterday, Tuesday, and as well as the focus data and events for today. So yesterday, Australia has released the interest rate decisions for September, okay, and it was remain the same at 1.5%. So besides that, United Kingdom was released the services PMI, the Purchasing Manager Index for services sectors for August, and it was at 53.2, slightly disappointed compared to the forecast of 53.5. So as for today, Australia was released the gross domestic product for second quarter, okay. So the second quarter growth data of Australia was released today morning during the Asia trading hours at 9:30, okay, and the result was at 0.8% growth, slightly disappointed compared to the forecast of 0.9% growth. And later tonight during the American trading hours, we can focus on the ISM non-manufacturing employment data for August, which will be releasing by the United States, okay, and this data is expected to be better from previous 53.9 to 55.4. Besides of United States data, Canada will going to decide its latest interest rate, which will be expected to remain the same at 0.75%, okay. So the last data tonight is the API weekly crude oil stocks, okay, which will be released by the United States as well, okay, and expected to bring some impact to the crude oil price. So now it's technical analysis sessions, and first instruments we're referring to the GBP USD in 4-hourly charts. So the pair GBP USD remain traded in an uptrend, okay, since the price has closed above the Fibonacci retracement level of 50 or at 1.30200. Alright, so it's a signals for shifting trend directions to become uptrends. Alright, so referring to the both moving average line which expanding upwards following a formations of golden cross. So the price closing above 1.30700 suggests for it to move further higher towards the next resistance level at 1.31600. And the single currencies, the euro remain traded in an uptrend structure against the US dollars, but currently it still remain retracing. Alright, so the signals that show in the MACD indicators with the both movement lines which moving flat, additional with the weak momentums. So the pair euro USD is expected to be ranging between 1.19200 and 1.19700 in short term. But a closure out of the range is the signals for it to move further towards the directions of the side it breakouts. So the next resistance level we can refer to 1.2 and the support level refer to 1.187. And the Kiwi seems to be remain traded in a downtrend against the US dollars, so it was lost momentum since the price closed above the resistance level of 0.723. So thus it is expected to experience a short-term retracement period and probably to move further higher towards the next resistance level at 0.729. And the Aussie remained traded in an uptrend against the US dollars, but the momentum is weak, so thus it is expected to be ranging between 0.795 and 0.8 in short terms. So closing above 0.8 suggests for continuations of uptrends and probably will move further higher towards the next resistance level at 0.81. Otherwise, closing below 0.794 is a signal for it to extend the retracement periods and move lower in the short term. The safe haven yen remains strong against the US dollar, so the pair USD JPY remain traded in a downtrend, but it is remain traded within the range between 108 and 110.0. Alright, so a closure that's below 108 is a signal for it to for continuations of downtrends, and will move further lower towards the long-term target of support level at 106. Otherwise, fail to close below 108 suggests to remain traded in the range, okay, within the tiny range. As for commodities, the gold price remains strong, so the momentum has extended, and referring to the both moving average line which remain expanding upwards, thus closing above the resistance level of $1,345 is a signal for it to move further higher towards the next resistance level at $1,375 a troy out. And the crude price, the West Texas Intermediate crude price was remain traded in uptrends. It seems like gaining momentum since the price closed above the Fibonacci retracement level of 50 at the price of $47.90. So a closure above $49 a barrel will suggest to move further higher towards the next resistance level at $49.30 a barrel. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.